and welcome everybody. Glad to be with you here today. And I thought today we would talk about day trading. I mean, it's been a very interesting couple of weeks in in the markets here. A lot of volatility, which is a very good thing for day trading. And so I think this is something that can really be helpful to everyone here. Now, I'm just trying to get my question panel open here, my chat panel. Let me see if I can open this up. I think I've managed to do it. Okay, I just want to make sure. There it is. Excellent. I want to make sure I can see your comments because I want this to be interactive with you. I want you to get your symbols ready and throw out your symbols to me so we can see how this system that I'm going to talk about today would have worked on the systems that you're used to trading or day trading. So let's get started here. So please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with your trading. And as Renee said, I am Vince Vora. I'm the head trader here at Trading Wins, and I've been doing this for a little over 30 years. Over that time, I've developed several systems and trading systems. One of them I'm going to share with you today, and it's specifically geared towards day trading. So what we are going to talk about today, we'll just spend a couple of minutes talking about the challenges of day trading. We'll talk about 4 keys to day trading success. These are absolutely vital. Excuse me if I'm clearing my throat or I cough every once in a while. Just got over a bout of the flu and the cough is still lingering, but I'll do my best to not cough into the mic. And then I will bring up the live charts and walk you through this strategy from A to Z here, all the way through. And then, of course, if you have questions, I will try to answer as many of them as we can. So again, type in your questions, type in your symbols. I think this is going to be an active session. Now, when it comes to day trading can often feel like this. Very, very dangerous. You'll hear a lot in the media about how difficult it is or how risky it is. Like anything else, it's really only risky if you don't know what you're doing. The best thing to do is keep it simple and know when to day trade. That is the real difference here. In low volatility environments, it's really a waste of time. There isn't a whole lot to do intraday. But when things get active, when volatility creeps into the market, and we saw a lot of it over the last couple of weeks, then volatility for anyone who's day trading is actually your best friend out there. And you'll see as we get through the charts, not only how active you can be, but how actually easy this can be if you keep things simple and you just look for a couple of key patterns using a couple of very common indicators, how easy it is to spot the entries and the exits, okay? So out of curiosity, how many of you have tried day trading before? And please be honest, how many of you have actually failed at it? It's very common. I certainly did when I first started. I lost a lot of money trying it until I understood exactly what I had to do or when to do it, more importantly. Thanks for sharing. Thanks, John. Thanks, Wayne. Appreciate it. I'm going to try in the next 45 minutes here to give you something that you can start using today that hopefully will change things around for you when it comes to day trading. Okay, now, as I mentioned, there are 4 things that you really need to focus on when it comes to day trading. The first one is discipline. Now, I always like to show this image because I don't think there's anyone more disciplined than someone in the military. But what I mean by discipline when it comes to day trading is knowing exactly what pattern to look for. And then your job as a trader becomes just to find it, execute on it, and repeat it. So it really becomes a rinse repeat type of task. And again, it won't take you very long to understand what the pattern is, to understand when to enter and when to exit. And then you, as a trader, your job is just going to be to open up your charts every day and understand, is this a day when I can use this? Is there activity? And if there is, let me get at it and look for that setup. And it becomes really a matter of rinse and repeat. So what I always tell my students is this will become boring at some point, but boring is exactly the point you want to get to in your trading, because boring means you're profitable. Boring means you're doing exactly what you need to do, the same thing over and over and over, and you're just consistently pulling money out of the markets. That's how this works. Focus. You really do need to be focused. So when you sit down to trade, turn off all distractions, focus on your charts. Your charts will tell you everything you need. That's right, Michael, being mechanical. We've heard this before, you know, how do you remove your emotions out of trading? How do you trade like a robot? And for many people, that's extremely difficult. The best way to do it is to keep things as simple as possible. Don't overcomplicate it, and just do what works. Focus on the one thing that works for you, and hopefully this what I'm going to teach you today will work for you. What you also want to do is minimize risk. I absolutely hate risk. I'll do anything to avoid risk in the markets. And so don't come into this with the expectation that, you know, you're going to get started on Tuesday and by Wednesday afternoon you're going to be a millionaire. No, you're not. That's not how this works. But if you really want to learn how to pull some money out of the markets whenever you have some time to sit in front of your screen, because here's the main benefit of knowing how to day trade. It's you don't have to sit in front of your screen all day, every day. It's whenever you have time, right? Sometimes you'll have an hour or two to kill. You can sit in front of your screen, and during that time, actually pull off a few trades and make some money. It's something that really is so valuable, because, you know, with everything going on in the economy and so on, knowing something like this is not only going to give you an opportunity to earn a living from it, but even just as a great backup plan. You know, if you're ever between jobs or you have some extra time, and it works on anything. So whether you have free time during the day to trade stocks or futures contracts, or whether you want to do it in the evening with Forex overnight, it really doesn't matter. It works on anything, okay? Now, the fourth key is to think strategically. And what I mean by that is to try to be a step ahead. And the way you do that is to know, again, exactly when you're going to enter. More importantly, even before you enter, you're going to know where your stop is going to be and where your take profit is going to be, where your exit, or at least which exit strategy you are going to be using. So the plan is all set in place way before you ever click that mouse to enter that initial order. Okay, that's what this is about. So let's focus on the golden rules here, on the keys. And when you get started, this is all about execution. It's all about following the plan to a T. Now, I can tell you from experience, from coaching hundreds, if not thousands of people, that there are times where you believe you're following the rules, but you may not be. And that's because your emotions are coming in and clouding your judgment. So it is very important for you to track your trades. Okay, track your trades and go back and review them to make sure, not that, you know, it was a winner versus a loser, but did you do everything that you had to do? I don't want you to think of this in terms of money. In other words, when you see a setup, you don't want to be thinking or trying to calculate, hey, how much money can I make on this trade? All you want to focus on is, how do I get in and how do I get out of this trade? Focus on execution and the money will come, okay? So it's important to track your trades, go back on a regular basis, and make sure that you are following those rules to a T, okay? Consistency is everything here. With these two things, if you build the right habits, okay, and become mechanical at it, in other words, being able to follow it religiously without thinking of anything else, just look for that setup and execute, that's how you'll become a specialist at this. Okay, that's the only way to do this. All right. Now, a couple things you can do to prepare for the day: pre-market and after hours trading. So when it comes to pre-market, I'm not asking you to trade during pre-market or even after hours. I don't do it. I don't think there's enough volume to make it worthwhile. What you want to do, though, is keep an eye on the activity happening pre-market or after hours to get an indication of what the day is going to actually be like. Okay, so you're using it for prep. So what you want to do is get up to speed on the day's major news stories, any economic data releases out, any major stocks in the news. Some of them could be in the news for many different reasons. Okay, you can do so by reading papers like the Investors Business Daily, Wall Street Journal, looking at or watching financial media like CNBC, Bloomberg, visiting sites like investing.com, which is really good for futures data, etc. What this will do is give you an indication of where the action is going to be. You know, if Apple is in the news for whatever reason that day, you know, maybe they came out with iPhone sales data, you know, in China or something. There's some reason that people are focused on that stock, then you know it is going to be active, because that's all you need to day trade. You need something active. You need something that's going to be actively traded that day. You need movement. If there's a stock that's not getting any attention and it's just trading sideways or in a very tight range, it's going to be very difficult for you to make money. After hours, exactly the same thing. Just keep an eye on it for major news stories or announcements that could impact the following day's trading. Earnings is a great example of that. Any stock releasing earnings is going to be moving rapidly. Okay, so you're not trying to get in and figure out which way that earnings gap is going to happen. You don't care about that. What you care is once it opens after earnings, where are the opportunities? Because generally, stocks that release earnings are going to be very active. So those are ones you want to pay attention to. So let me bring up my charts and walk you through this. Okay. Now, one tip always, no matter whether you're day trading on a daily time frame, weekly, monthly, it doesn't matter, or one instrument, it's always a smart idea, excuse me, to trade a symbol that is trending strongly in one direction or the other. And it's very predictable. Here's a chart of Boeing. Very, very predictable, right? Now, on a daily time frame, you know, during these sideways periods, yeah, that's not going to be great for day trading. My point is here, you want to trade something that is very predictable. So when you look at it on a lower time frame, like a 1 minute or a 5 minute, you know, is it a stock that trends well in one direction or the other, you know, for sustained periods? That's what you want to see. You want to see activity. Okay, so Boeing may not be it. It may be great to trade on a daily time frame because it's a nice, slow, steady performer in one direction. It makes it very, very easy to find entries, etc. But you want activity, right? You want activity. How active has Apple been, right? And more importantly, the average true range. How much does it move in any given day? So if you look at Boeing compared to Apple, right? Look at the daily bars on Apple. The swings are much wider, right? Compared to a Boeing, for example. And that's what you want. You want activity so that when you switch to a daily, or excuse me, a 1 minute or a 5 minute or a 15 minute, there is movement here that you can actually trade. There's activity. So an Apple, an Amazon, for example, a Tesla. Now, generally any stock over $100 is going to be very active and will be good on the lower time frames. But there are also stocks in the $50 range, in the $20 range that are in the news that day, that will be very active. That's why you want to pay attention to the pre-market and after hours. Futures contracts, same thing. Gold, crude oil, all of them are great. Now, since we had that bit of a glitch earlier, I'm going to instead of putting on the indicators on here one at a time, I'm just going to bring up the layout on the chart that I normally use, and I'm going to explain this to you. Let me just take one off here. Okay, and I'm going to go through these indicators one by one to help you understand what you're seeing on the chart, and then we're going to go to the lower time frames and start looking at some examples. So for now, I'm going to stick to the daily time frame just to explain this to you, and then we'll move down. So this is a chart of the SPYs. What you're seeing here, this blue line here, is the 20-period simple moving average based on the close. 20-period simple moving average. And we use that for momentum, right? In other words, if we're looking for a trade to the long side, we want this to be sloping higher. And the more significant the slope, the better. It means there's momentum and the stock is moving in that direction, okay? Secondly is this shaded area, the cloud, all right? Now, sometimes it's yellow, sometimes it's pink like it is on the far right here. This is the Ichimoku Kinko Hyo indicator, the cloud indicator. Now, I'm going to go into the settings to show you that we use the default settings, 9 and 26. We do not change that. What we do is remove some of the lines associated with this indicator. In other words, the Tenkan, the Kijin, and the Chiku. There's 3 other lines. They're moving averages, but they're calculated a little differently. That would normally be on your chart, but it makes it a little messy, and we prefer to only use the cloud portion, the shaded portion, which is the span A and span B. So if you're a Thinkorswim user, click on each tab one at a time here, the Tenkan, Kijin, and Chiku, and make sure you uncheck the show plot box here. That will remove them from your chart. If you're a Metastock user, you can go into the settings and make these 3 invisible. If you're using any other platform, you can change the color of these 3 lines to match the background color of your chart, and that will make them disappear. Okay. Now we use that indicator for trend. In other words, if the price bars and the moving average are above the cloud, that's an uptrend. If they're both below the cloud, that's a downtrend. And if one or both are overlapping, that's an area of consolidation that we do not want to trade in. Okay, so at a quick glance, whenever you bring up a chart, you'll be able to tell if there is a trend and in what direction, and whether or not there's momentum behind that move. Very simple, very clear. Now, we're also going to use 2 other indicators to help us judge our entry point. Both very, very common. The first one here, and I'm going to zoom in a little here so you can see it, is the CCI, okay, Commodity Channel Index. Now, if I go into the settings, this one normally defaults to 14, okay, and has lines at either the -100 and the +100 levels. This is normally used to identify overbought or oversold conditions. We use it differently. What we do, first of all, since we're going to be trading on a much shorter time frame, we don't want to use a 14-period CCI. We want to use a 5-period. So we drop it from 14 to 5. That will give us a much more responsive CCI. And we remove the lines at -100 and +100, and we just leave the 0 line in, okay, the line drawn right down the middle. So it is a 5-period CCI with a line drawn down the middle at 0, okay? And so what we want to see for a long trade is that the CCI is above the 0 line, and for a short trade, we want it to be below that 0 line. Now, lastly, and certainly not least, is the MACD. I like to use the MACD histogram. And the settings are going to be much, much different. So usually you have settings on the MACD of 9, 12, and 26. Excuse me. We are going to change that to 4, 5, and 13. These are settings that I found through trial and error to work extremely well in combination with the CCI and the 20-period moving average and the cloud, etc. So you want a MACD with a setting of 4, 5, 13, okay? All exponential here. So you have 20-period SMA, you have the Ichimoku cloud with the default settings of 9 and 26, you have a CCI with a 5-period and a line drawn down in the middle at 0, and you have the MACD with settings of 4, 5, and 13. That is your chart layout, okay? And that is all you're going to need to identify some really great trade opportunities. So, for example, here on the SPY, if we are above the cloud with both price and the moving average, we're in an uptrend. And if the moving average is sloping higher, we know we have momentum higher. So what are we looking for? We're looking for a long entry. And so usually, whenever there's a period of consolidation like this, or some kind of pullback towards that 20, you're going to see the CCI go negative, go below that 0 line. You're also going to see the MACD go below that 0 line, okay? Or show you the red bars. Now, whenever they move back above their 0 lines, in other words, CCI moves first, and then we get confirmation from MACD. So the first bar that you can identify where both the MACD and the CCI 5 are above 0 at the same time here, that would be your setup bar. So right here, this bar here is the setup bar. And it just so happens that it's the bar that cleared these highs. Okay? So fantastic entry. Now, once you've identified your setup bar, you just mark the high of that bar. And if you get a trade 1 tick or 1 penny above the high, then you can feel free to go in. And your stop should go just below the most recent pivot low, which is right here. Usually a very, very tight stop. So you have a very small amount of risk here and the potential for a substantial gain. And remember, the momentum is key. The slope on the 20 is key. The sharper it is, usually the bigger the follow-through move, okay? So also, the amount of risk you're taking is key, right? So whenever, and actually the risk is from the entry point, which is here, to your stop. I should be very clear about that. That's your risk. Still much smaller compared to your gains, but these are a couple things you can use to differentiate from one trade to another. The amount of slope on the 20 and the size of the risk, because the smaller the risk, the better, right? So if you have identical trades otherwise, why take one with more risk than one with less, right? So that is really, in a nutshell, all you're looking for. You're finding stocks that are trending strongly to the upside, where price and the moving average are above the cloud, so you have an uptrend, and you have that slope on the 20, and then you just wait for a period where it pulls back a little, allowing the CCI and the MACD to go negative, and then when both are positive, that is your setup bar, right? Mark the high. If you get a trade above it, off it goes. Now, there are many ways, many exits you can use as well. You can wait for a close below the 20. That's a simple one. You can use a parabolic SAR, which is an exit indicator that plots little dots that sort of trails trails the order along, and if price breaks through that dot, you know it's time to exit. Just like if you're a Thinkorswim user, you can use an ATR trailing stop indicator right here. Now, if you were to use this, and I do, I really like this one. I'm going to throw it on for a second here. What I want you to do is go into the settings and change them. So the ATR period can remain as 5, but the ATR factor, what I find is putting it to a 2.0 works really well. So 5 and 2.0. Okay. If you add that on, there it is. So there are these dots. It just trails the order. You can trail your stop, change it every day or every new bar to follow along until it gets taken out. When the dot moves from one side to the other, you can feel free to exit. Okay. So very, very simple. Very simple. Let me remove that so we keep a clear screen. And let's run through other examples here. So now let's go here. Let me clear this and let's go down to a lower time frame. Let's look at a 5-minute, right? So here, let me zoom in any portion here. The SPY's on a 5-minute. All right. Let me just zoom in a little more so you can see these clearly. So ideally, what you want to do is focus on the ones where you have a strong slope in your direction. But what you want to see for a short trade is that price and the moving average are below the cloud, and there's a downward slope on the 20. Then all you have to do is wait for the CCI and the MACD to go positive, let them both come above 0, and then as soon as you can identify the first bar, right, the first bar where they're both below 0, that is your setup bar. You mark that bar. So there's an entry right in here. You mark the low of that bar, and if you get a trade below it, you can short it or buy puts or however you want to do it. Now, you don't have to have a downward sloping 20. You could enter on a situation like this where price attempts to move above the cloud, okay, fails and comes back. Right here, this bar is the first bar that is below the 0 line on both CCI and the MACD. You mark the low of that bar right here, and off it goes. Okay, and there are several entries along the way. So if you're more of an aggressive trader, you can add to your position as every new trigger appears, or you can just use that as confidence that you're in the right trade and you should stay in the trade. All right, but a very, very simple setup, and you'll find entries all throughout here, It's just very, very easy. So whether you're trading the 1 minute, the 5 minute, the 15-minute chart, the 1 hour chart, all through here, okay, you'll see the crosses. We come up, back down, and there's an entry in here. There's another one in here, right back in here. Okay, so it works. It is very, very consistent, very easy to spot. Once you get used to this, and it won't take you long, you'll be able to spot them very, very quickly, very easily. And again, you can execute on them very, very easily, but that's what you should focus on. Not how much money am I going to make here, but do I have all the conditions that I need, right? Am I marking my entry correctly? Am I marking my stop level correctly? What exit strategy am I going to use? You need to know that ahead of time. If you just follow those rules, you'll do very, very well. All right, let's look at some questions here. Marius is saying what's the values again for the Ichimoku cloud? 9 and 26. Those are the default values. Any charting platform, you'll find it's the same, 9 and 26. Okay. Dia saying on the right edge, and maybe I've changed the chart since then, the SMA is not angled upward. How do we look at that? Again, it's ideal to have the slope on that 20, okay? So for example, here, if you are trying to get into a trade here, you can. You're just, what you need to understand is you're taking a little more risk because you don't have momentum on your side, right? So if price is below the cloud, along with the moving average, and the CCI and the MACD both go negative, okay, you can look at entering a trade. Certainly if the price bars are within the cloud, I would not, but you can if you don't have slope. It's just a little riskier because you don't have momentum on your side, okay? Once you see it sloping, now the very next move where they pull back above zero and then cross back again, so it was right in this area, right in here. So you gave up a little bit of a move, but now the odds are really stacked in your favor because you have a clear downtrend, you have clear momentum lower, right? And it's just like rolling down a hill. It just makes it so much easier, and it works both ways, okay, up or down. So you're going to find so many trades like this that you might as well be selective and take the ones where the odds are fully stacked in your favor rather than trying to make it difficult on yourself, okay? Does anyone want to see a particular stock or a particular futures contract? I'll try to run through as many as I can here in the time we have left. So here's a 15-minute on the USDCAD. How many of you trade Forex, right? So here we consolidate, we finally pop back up above the cloud, and there's a slope on that 20 now. As soon as it pulls back, I might as well zoom in here, see if we can see it a little clearer. Here, it pulls back, right? All right, allowing the CCI and the MACD to go negative. The first bar where they go positive is right here. This one, right in here. Okay, this one. You mark that high of it if you get a trade above the high, and you want it to cross on the next bar, right? You want it to be immediate because this is a momentum trade. Okay, your initial stop goes right here, and then you just manage that order on the way up. Okay, and if you're more aggressive, every new cross you can add to it along the way. Very, very simple. All right. Mike was saying GLD for gold, the ETF. Absolutely. Let's have a look. So GLD, now this is a 15-minute. Okay. Let's zoom in here. And not, there has to be activity. So if it's a day where gold is trading in a very small range, you're not going to see many opportunities. But there's usually activity somewhere. Here's gold. Oh, here's another tip I want to give you. Whenever you see the 20-period moving average move from one side of the cloud to the other with a slope already in place, okay, that is key. Just like here. See how it was below the cloud and it moved through the cloud with slope? That usually is an indication of a major move coming in the opposite direction. It's not 100%, but it's close. Okay, so when you see it break through the cloud, one way or the other, with a slope already in place, you know there's a big move coming. So that way, then you just wait for the proper setup. So see here how price moved up, came back, but it pulled back so far or consolidated for so long that momentum went flat, right? The moving average was totally flat. So you could have taken the trade here when both CCI and MACD went positive, but you did not have momentum in your favor, right? It's totally flat. So what you want to do is just give it a bit more time. It moved higher again, pulled back again. This time we had slope in our favor, right? Now here, when both MACD and the CCI went positive, is right in here. From here, it just took off. So, there's going to be so many setups. Take the safe ones, right? The safer ones. Now it's flat. Now you got to wait to regain momentum and then relook at another setup. But whether it's 15-minute, 1 minute, 5 minute, okay, setups are everywhere. Now, you can use the ATR, the average true range indicator, for any symbol to know what the average move from high to low is on any particular time frame. Because if the ATR tells you, hey, this has a 5-cent move on any given bar for 1 minute, it's not worth trading, right? But if you trade something like a Tesla, and you have a $1.50 move, usually per bar on a 1 minute, then you have a lot of opportunity, right? 5 minute, 15 minute, look at these moves here. And they can be substantial. So if you look at Tesla, went from here around 333, right, down to 295. I mean, we're talking about, almost a 40-point move, right? So now that's over a couple of days, but throughout, as it swings back and forth here on the CCI and the MACD, you're picking off entries, right? And what's the key here? The key is, look at that slope on the 20 coming through the cloud, right? You have a bigger trade coming, right? And when it crosses the opposite way, now you know that there's a bigger move coming in that direction. So you just wait and pick off those entries. Have a look at this one here, right? Here's the first green bar on the MACD. The CCI is positive, right? It was this little bar in here. You mark the high and go from there. If you want to be a little more conservative, you can mark the high of that whole pullback. And as soon as it breaks, boom, it just takes off, right? And again, from here, we're around 326. We're at 342 here, right? And big moves. The hourly time frame is fantastic for these big name stocks. Amazon, Tesla, Apple, you name it, okay? Fantastic moves throughout the hourly, okay? The Forex pairs, the futures contracts, ETFs work great, whatever you want. D is asking for CERN. Let's have a look at CERN. So the key is to know which stocks to trade, okay, and what time frame works best. So here's the hourly. Let's shorten it a little. Let's go to 15 minutes on CERN, right? Great setups all throughout here, all through many different entries. Now, once you pick off one, you don't have to add to your position along the way. You can just sit through it until your exit strategy takes you out. But again, a decent move here, going from about 68 to 63, 62 here on this move. And with options, you can leverage this, right? If you're picking up calls or puts here, you can use weekly options because you don't plan to be in this trade for very long, right? Very inexpensive. You can pick up multiple contracts, right? And it works extremely well. So Michael, I would use weeklies if you're using the intraday time frames, because if you're trading a 5-minute chart, you're planning to be in that order, maybe an hour or two at most, right? So you're going to be in and out same day. There's no need to go far out on your options. You can use the weeklies. If you're going to trade the hourly or 4-hour, and you can use this on the higher time frames. If you want to use it on the daily or the weekly, then you have to go further out and use monthly expirations. But it works best on the intraday time frames, and with weekly options, it works really well. Okay. Does anybody have any other symbols you want to see before I move on? Because I do have to wrap this up. Yes, and Michael, you're right. Weekly options are much less expensive. Okay, they're cheaper. So Eric, having a look at the gold futures here. If there's a particular time frame you want to look at, let me know. Here's the 15-minute right in here. This was the last couple of days, and there were nice entries throughout. Okay. Today has been fairly quiet. Another thing you can do let's look at the 5 minute. Eric wants to look at the 5 minute. So right in here. So I'll just zoom into an area so you can see it. Again, you want to wait for the time periods that have slope. If it flattens out when it pulls back, okay, you're not forced to take this. That's the beauty of it. You can sit and wait for your ideal setup, but you can see there are setups throughout. If I move through here, and then if you get a cross from one side to the other with slope, all right, that gives you a heads up to a bigger move coming, right? When it's flat, you don't need to try to outguess it, just skip it, move on to something else. What you're gonna find is, for example, gold futures may be great today. Tomorrow, they may be fairly quiet, right? So one of the things you can do is look at the opening range as well. So for example, let's zoom into this area. So for Monday, okay? So if we look at Monday here, and we look at 9:30 to 10 or 10:30, I usually like to do the first hour, right? If I'm trading stocks especially. And so what I want to do is mark the lowest point in the first hour and the highest point, right? And then look for some sort of breakout for the stock, okay? Generally, what you'll find is if you mark the high and the low and it breaks through one of those levels, it tends to spend the rest of the day moving in that direction. So when you have a very tight opening range, usually it's going to be a very quiet day, but you can tell very easily. So for example, if I take my price level, I look at 9:30 here, I'll say this is the low, okay? And then 10:30, this is the high. If you see it trading within this range, okay, or along this area like that the whole time, there's not a whole lot to do, okay? Once it breaks out, that's where you start getting the trades coming in, okay? So that's what you want to do, is mark the first hour. Let's see, any other questions? Let me, once again, here, just tell you, I really want you to focus on this. I don't want you to focus on, hey, there's a setup here, how much money can I make on this? The money will come. Focus on execution. Make yourself a checklist of everything I said, right? What you want. You want to make sure price is above the cloud along with the moving average. That's an uptrend, right? You want to make sure you have slope in the direction of your trade. And then you want to wait for the CCI and the MACD to dip below zero and back above. And when they're both back above, that's your entry point. That's your setup bar. You mark the high. If it immediately trades above it, you go long, you know where to put your stop. Make a checklist of every little thing and just focus on execution, okay? Focus on execution. That is the key. So I'm running out of time here. Let me quickly tell you about a pro class that we have on this. If you go to tradingwins.com/Feb for February, short form for February, here, we list everything we're going to talk about. So in this on-demand recording, I go over those 4 specific keys to day trading in a lot more detail, okay? They really are key. That's what's going to allow you to build the habits to trade this consistently, okay? I'm also going to show you how to quickly and easily calculate your risk reward on a trade so you can easily know which one you should take and which one you should avoid. Okay, a very quick and easy calculation. I'm going to share my watch list for you. I'm going to show you the list that I like to trade with these. And then I'm going to show you how to, or some methods to select the best time frames to trade according to the market conditions. Okay, and how to use multiple time frames with this that will increase the accuracy even more. All right, and show you how I trade this with options. I absolutely love options because they control your risk even more, but they allow you to really leverage the position. And you're taking a very small amount of risk with this to begin with. Now you can really, really leverage it with options. We always like to do something special for investor inspiration because they've been so good to us. So we're offering this for only $3. So obviously it's not a money maker for us. We want you to see what we do here at Trade and Win. So even though it's not listed here, the other thing I'm going to do for you is I'm going to throw in a 30-day membership to our Trade and Win's Pro service. And what that entails is videos from myself 5 times a week. Every Sunday to Thursday, I'll send you a video recapping the markets that day. And that's also where I share my trade ideas. We also get together, all the pro members get together twice a week in a live format. You get to come into our room, ask me any trading related question you like. So it's a great way to follow up on any questions you have here or any other challenges you're having with your trading. And we also offer a course of the month to our pro members at no extra charge, which you will get as well. And all those sessions, the live chats, everything else is recorded and put into your live, your personal video library, so that if you're working and you can't be with us live at that time, you're still gonna get a recording of the session. So you get all of that for just $3. It's tradingwins.com/Feb.